market sell-off. I'm Reema Tendulkar. With me is Prashant. And now Prashant is actually over at the big wall to tell us what exactly spooked the market and led to this plunge.
I mean, the fallout from the US jobs data really continued, coming into today's session as well. And I think that is essentially the first driver for, this panic which began on Friday. And of course, it continued over the weekend. It sort of showed through in prices as we came back in Asia this morning. So big miss on the US jobs data has triggered recession fears. It's actually the first time labor market data, monthly jobs data in the US has been such a big miss in this particular cycle. And remember, till last week, expectations were that it's going to be, a very moderate, soft landing, which will allow the Fed to cut rates. And it's all very well orchestrated. But this could mean that, it's not all under control. And the Fed perhaps is even behind the curve with what they want to do as far as interest rates are concerned. As a result of which, US money markets are now pricing in a 50 basis point rate cut in September and a total of 125 basis points rate cut, through the course of 2024. So this is a trigger and a sort of reason number one. Then we come to what's, of course, been happening in Japan, right? We've heard yen and carry unwind all day today. First, let me tell you what happened on prices. So the benchmark Nikkei is down over 20% in the last 3 days now. And you look at the USD JPY, that has fallen 20 yen to a dollar in the last 1 month. So basically, the currency has gone from 162 to 145 from the beginning of July. That's a massive move for a currency like that in such a short time span. The last time we had this magnitude of a rally, along with interest rate differentials between Japan and the US around 5%, it was back in 1998-99. And of course, we had that sort of LTCM crisis back then. Now, fears of yen carry trade unwinding is essentially reason number two. So, I mean, people borrowing in Japan, very low interest rates, investing around the world. And of course, the yen moving so sharply upsets plans. Stops are hit and there is a forced unwinding which takes place. So that is reason number two. Number three, and this went unnoticed under the radar for the first couple of hours when we began trading, but NVIDIA, the big reason why US stock markets have done so well, is reportedly delaying its next AI chip Blackwell by at least 3 months. And it was not a coincidence that the Taiwanese market was amongst the worst performer in Asian markets today. And also take a look at the fact that NASDAQ continues to underperform the S&P. So that is, I think you could blame it on the NVIDIA story there. And number four, I don't think this was a really dominating driver, but geopolitics, right? The political news website Axios reports that, attack by Iran and Hezbollah against Israel could start as early as Monday. I would say that, what was happening with the currency markets and fears of a US recession were the dominating drivers. This, of course, if it were to come through and it's a big one, could hurt at the margin going forward. Back to you.
Okay, thank you very much for that. Let's